Hey guys, and welcome to the next stage of the course. This is the introduction to charts. Today we're going to look at how you can use the software that we use and how to actually understand a bit more about how the charts work. So let's get straight into it. Candlesticks, what's a candlestick? In Forex, as technical traders, we analyze charts, which is basically price represented on a chart. And this is either made out of a line or candlesticks, but in our trading strategies, we only use candlesticks. So let's get into it. Candlesticks can carry a lot of information. Candlesticks are a single time frame. For example, if we select the 4-hour time frame, this means each candle we see is 4 hours worth of price information. The common time frames we use are daily, 4-hour, 1 hour, and a smaller time frame of your choice. But realistically, you can make profit in any time frame that you wish to use. Whatever you're comfortable with, whatever you enjoy using, use that time frame. So, candle anatomy. This is what it looks like. Essentially, a bullish candle is basically when price closes above where it opens. For example, in that 4-hour session, if we opened here, this is the start of the 4 hours, and this is the end of the 4 hours. Price has moved this distance here, and this makes it a bullish candle because it has moved up. This is the highest point, and this is the lowest point in this 4-hour time frame session. So same again with the bearish candle, which is the opposite of the bullish, where price closes lower than it opened. So price opened here in the 4-hour and closed here. The lowest it was here, and the highest it was here. Candlesticks can vary in size, wicks, and the body can always be different. Specific time frames are always going to look different. But we move on from there. What do candlesticks tell us? Candlesticks can tell us exactly what price has done in a specific session or time frame. It tells us what price opened at and how price closed and the highs and lows. But what does all this mean? So the candlestick info means there are two types of movements in Forex, bullish and bearish. If we have overly amounts of bearish candles, which is the ones that close lower than they open, this means we have pressure at the downside and price is decreasing. This means we are in a quote-unquote bearish market. Bullish is the complete opposite, means pressure to the upside, price is increasing between the currency pairs. The currencies or the currency pair that you're looking at, price is increasing, which means we're in a bullish market. If price is moving down, we're seeing bearish. If price is moving up, we see bullish, as I've just mentioned. So, what controls price? Price is affected by many things, but the two main ones you need to understand are banks and economies. Institution traders are essentially banks who control millions and millions of pounds when trading, and these big orders that they place can affect price levels. They also trade in the way we do, and they understand how we trade. And this is how we know how to buy and sell, because we understand how they trade. Understanding when institutions may be trading, placing their positions, allows us to potentially make money. Economies also affect price. For example, news affecting United Kingdom will affect the Great British Pound, and so on and so forth. Right now, COVID is causing lots of volatility in the markets, and we are seeing that in profits and win percentage, but it can be a good thing. Volatility in the right direction can mean we make a lot more money. So, how are wicks formed? Wicks are lines above and below the candlestick body, which is what we just talked about briefly. Imagine we're using the 4-hour time frame and our session has just started. At the start of this 4-hour session, we get some news that affects price heavily and price flies upwards. At this stage, price is only reacting to the news and is not where price quote-unquote belongs. This usually corrects itself with a pullback, which means the highest point during this session came from the news, but price correction causes it to close further down from where the actual high point was. Price can also create wicks from indecision in the market, buyers and sellers battling for dominance to force the market in a specific direction. These candles tend to have upper and lower wicks, and the candlestick bodies are usually quite small. So let's have a look at this in the charts. Head over to tradingview.com, make a free account, and I'll see you over there. Alright guys, here we are back on the charts. This is tradingview.com. So let me just quickly, if you go over TradingView, you've got your account. This is the page you should be on. This is the home page of TradingView. So we head over to here where it says chart. Click it, straightforward, bam, we're in. Now, I don't know what chart will be on the screen, but if you literally just start typing, for example, Euro, Canadian dollar, you want to use the one that's by Forex FXCM. Click that, bang. This one usually is the most consistent for replicating brokers, so we'll go with this one. Now, here's all the candlesticks we were talking about, as we know. Here's the 4-hour time frame. Let's just break down a candle for now, and I want to look at this candle right here. So this is a 1-hour candle, sorry, right? So if we go into the 15 minutes up here, we can see that this 1-hour candle is built up of these four what do you call it, 15-minute candles. If we go back to the 1 hour, we'll be able to see that. It's awkwardly highlighted, but that's what it looks like. So price in the start of the hour went up, dropped all the way back down. So if we look back to the hour, this is how we have the get off that, try and click. This is how we have this big wick here. As we said, in that 15 minutes to begin with, it went up and it dropped down. This is how we have the wick, and of course it closed a lot lower than where it opened, which is here. This is the distance from where it closed and opened, right there. So if we look at an hour, you can't even see the line. Let's move it over. So yeah, that's the distance from close and open right there. But of course we see in the 15-minute exactly what happened, and you could keep breaking this down in the 5-minute. This is what happened. These 3 candles were the last 15-minute candle, etc, etc. But we're going to go from there, and that's all you need to know for now. These are your time frames at the top. If you press this little arrow, you can of course choose different time frames. If you right click the chart and you press settings, you can go ahead and customize what your chart looks like. Choose the colors that you like, choose what you like on there. It really doesn't matter what you do, it's just own personal preference. These are the colors I like to go for right there. So some of the tools on the left here, now that you know the time frames, what you want to do is always have this selected unless you're analyzing, because this is to select and scroll and all sorts of things. If you want to draw lines, this is where they are. Trend line, which is essentially a straight line that you can decide where it goes. Of course, we have the horizontal ray, which is just goes to the right of where your mouse clicked. If you want a full line that goes all the way across, we can use horizontal line right there, and then we see it go all the way across until time data runs out. And those are the ones we really use here. Arrow if you really wish to identify which way the trend's going. But yeah, that's pretty much everything from this section. This one here, we only use one tool, and that's the Fibonacci retracement tool. Usually yours won't look like this, but it will have numbers on, and it helps you identify where 50% is, which is quite an important number for a lot of our strategies. So make sure you note down the Fibonacci tool. This one here, brush tool, square, circle, whatever. These are the sort of things you use. Shapes. Text can be really good if you want to annotate your charts, which I heavily recommend if you're a beginner trader. Annotating charts can be very, very useful. The next one down here, we don't use anything in here. You can if you want to learn some other things, but we don't. And in here we use 2 things. Well, we can use a few more. We have the long position and the short position. You should know what these mean by now. Here's where we control the stop loss, take profit. And we can also see this number here. This is the pips for the stop loss, and this is the pips for the take profit. So again, when we're managing risk, we can figure this out, and your risk reward ratio, which we'll go into in the future. For now, I just want you to get comfortable looking around TradingView, understand the tools that we have so you can use them after you've learned a strategy. And potentially price range if you want to see where price is going to go. And that's pretty much it for that section. The measure tool, simply click it, click and move. It gives you a lot of data on how long, how many pips, how many bars, percentage change, etc, etc. And the last one that you really want to potentially use is remove drones, or even hide all drones. Again, these are up to personal preference. You can just click on them, click delete, or you can right click them and hit remove. It doesn't matter, but head over, get comfortable on TradingView, understand all the tools, potentially go in and mark the ones as favorites that I've just spoke about, and they'll come up on a favorites bar like this. But other than that, have fun, play around with it, and I'll see you in the next section of the course.